And then we'll jog over to another part of the big ideas that I know many people enjoy, and that is about crypto assets or digital assets. And you'll see how we get to our base case for the Bitcoin price and our bull case. Many people know us for our bull case, $1.5 million, and we actually think the odds have gone up that our bull case will be the right number because of what is becoming the institutionalization of this new asset class. So many institutional investors are now looking at Bitcoin and thinking that they need to add it to their asset allocation because its return profile looks so much different and its risk profile looks so much different from all of the other assets in their portfolios. And then in another section of big ideas, you'll see stablecoins. And I do think it is quite a surprise to learn that stablecoins in total, the transaction value of all of them is roughly, or was last year, $15 trillion. That was more than either Visa or MasterCard. And by the end of the year, the run rate was nearly double that, $30 trillion. Now, when we say that, I want to make sure you understand that this is transaction value. There are very large transactions taking place with stablecoins. Transaction volume, or the number of transactions, Visa and MasterCard still have many more transactions, but the value that is ramping through the digital asset ecosystem as decentralized finance takes off, or another way of saying it, the internet financial system takes off, that is scaling tremendously in a way that I don't think people really understand. So we wanted to highlight the difference between that and the stable coins in the context of Visa and MasterCard.
Attention, all crypto enthusiasts and market watchers. There's electrifying news shaking up the financial world. Cathie Wood has just come out to reveal her future prediction for Bitcoin, and it is nothing less than hitting a staggering $1.5 million by 2030. Sounds too good to be true? Well, Cathie Wood has laid out a potential path to this astonishing milestone. But what's fueling this ascent? Could the involvement from global financial systems and the burgeoning institutional adoption be the answer? Welcome back, everyone, to Investocracy Crypto.
I'll wind up now by talking about what all of these convergences are going to do to economic activity and to the stock market as a whole. We believe that real GDP growth globally is going to accelerate from 3%, where it has been for the past 125 years, to 7 to 8%, if not more, thanks to the convergence among these technologies: robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing. Now, why are we so confident about that? That sounds like an outrageous number. The consensus forecast is 3%. Well, the reason is, if you look back in history, you will see that about 125 years ago, 3 innovation platforms were evolving at the same time: telephone, electricity, and internal combustion engine. And what did that do to real GDP growth globally? It increased the rate of real GDP growth by 5-fold. We went from 0.6%, where the world had been over the 400 years, from 1500 to 1900. We went from 0.6% to 3%. That was a 5-fold increase. And now we're telling you, even though there are 5 innovation platforms evolving, with AI at the heart and soul of the acceleration in these technology platforms, that we're only going to see a 2 to 2.5-fold increase. We think that could be very conservative. And one of the reasons this is going to happen is because of productivity.
Integrating Bitcoin into the global financial tapestry speaks volumes. Imagine the implications of the U.S. government mulling over a strategic Bitcoin reserve. Data doesn't lie. Bitcoin's metrics are hard to ignore. The daily transaction volume is smashing prior records. Hash rates peak relentlessly, and an impressive number of investors cling to their Bitcoin holdings, showing steadfast belief in its long-term promise.
Productivity is going to grow dramatically, and productivity is associated with low inflation growth as well. You can have higher wage growth if productivity is rising. So it's a win-win for everyone. And what a win-win means is wealth creation. And what does that mean for the stock market? Well, if we're right, then the value associated with truly disruptive innovation during the next 5 years in the equity markets, we believe, is going to rise from $12 trillion to $140 trillion, more than tenfold. Now, you might wonder what is going to happen to the Mag 6 during that period of time. Well, the Mag 6 will probably do fine altogether, although some will be disrupted by this new world order. That said, we expect the Mag 6 to go from 16 trillion today to 60 trillion. So that's about a 4-fold increase, maybe a little less than that. This is another way of saying that we expect the equity market, the bull market, to broaden out during the next 5 years and benefit a lot of companies that have been toiling away while the Mag 6 were getting all the glory. And soon, we think, they are going to deliver the goods as well. And the goods means equity market appreciation. So we know that innovation solves problems, and we know that innovation is key to growth. That's why I founded ARC more than 10 years ago, and truly disruptive innovation is here now. So remember, download Big Ideas 2025 from arc-invest.com and enjoy 140 pages of research, original research, that has been done so masterfully by our analysts and our chief futurist and our directors. They deserve all the credit. I am just here to tell the story.
This burgeoning trust is reflected in the newfound vigor around spot Bitcoin ETFs, causing traditional investment portfolios to set aside larger slices for Bitcoin. Cathie Wood's ambitious forecast of Bitcoin hitting $1.5 million by 2030 isn't a whimsical daydream. Instead, it's steeped in strategically sound assumptions. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
President Trump's crypto czar, David Sachs, held a news conference earlier today laying out his plans for digital asset regulation and stablecoins. He also mentioned his team is looking into the feasibility of a Bitcoin reserve. Joining us now in an exclusive interview is David Sachs. He is President Trump's AI and crypto czar. And David, it's great to have you on Overtime. Welcome.
Good to be here.
So that's exactly where I want to start with you, and that is the fact that you did talk about the need for this clear regulatory framework. How quickly can you stand this up?
Well, I was on the Hill today meeting with the leaders of our House and Senate committees for banking and for finance, and they are very committed to moving legislation through the House and the Senate this year in order to provide that clear regulatory framework that the digital assets ecosystem needs to sustain innovation in the United States. And so those chairmen, I think, are very committed. President Trump is committed, and I think we can do something here. But as you know, moving legislation through Congress takes time. But I think this is something we could do in the next 6 months.
The feasibility of a Bitcoin reserve, you said that's being studied. It's one of the first things that's on the table here. What goes into that process? Is that something that would be standalone, or is that something that could potentially be tucked into, say, a sovereign wealth fund, which has been the speculation today on the heels of that executive order?
I guess it's possible that the sovereign wealth fund could decide that they want to make Bitcoin or digital assets part of its portfolio. You're going to ask the incoming Commerce Secretary Howard Lutnick about that. The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at.
Hey, David, good to see you. It's John Fort. So I want to zoom out for a moment. There's a huge opportunity here for you, for Silicon Valley, a number of entrepreneurs, investors who are in the Trump administration. I've heard from a number of people in Silicon Valley who are excited about what's possible. I also see a big risk in the sense that the scale of human impact in government is just different. We're seeing it in the reaction to some of what Elon Musk is doing initially. There's human impact domestically and globally. Is that in your mind at all? Because based on your success or not in these roles, it could affect perceptions of Silicon Valley for a generation or more.
Well, I mean, you're getting a little bit outside my lane here, John, but if you're asking me what I think about what Elon's doing, I think it's terrific for the United States and for innovation and for Silicon Valley. We have a federal government right now that runs a $2 trillion deficit every year, and the country's almost $40 trillion in debt. And if you want to ask what is the biggest threat to American prosperity and to continued American leadership and innovation, you'd have to say it's our out-of-control deficit and debt. And I think Elon Musk, at the directive of President Trump, is actually doing something to get that spending under control, and I think we should be welcoming it.
As we close this chapter on Bitcoin's burgeoning narrative, it's hard not to be swept by its promise. For investors who recognize potential in these trends and Cathie Wood's predictions, as audacious as they seem, Bitcoin offers allure. The cryptocurrency landscape today positions Bitcoin strategically, both in institutional favor and as government entities flirt with crypto storage paradigms. But what do you think? And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.